Okay, Meta, this is like, yeah, okay. So let's start with...
Maybe we should put together an ETF,
right.
and we just trade on just a short of everybody that has Super Bowl ads, right?
We'll call it punt or something. All right, let's turn to your first buy here, which is Uber. And after being on pace for its worst day of the year because of Lyft's disastrous results, they did just report a strong quarter, and you like the stock here. Tell us about it.
I do. I really think they're going to retest their highs up at 44. They finally broke out of the sideways range they've been in for a couple of months. But it's not just that. They have the scale and the profitability. And you saw the Super Bowl matchup this week in earnings between Uber and Lyft. Uber executed. Lyft did not. People are willing to pay more for their rides. Uber is the more luxury product. They've got 118 million riders now. They're ramping up their different lines of business with Uber Eats. And now they're getting into freight shipping. So I think not only are they expanding globally, they have the riders. Only about 17 people cross-share across the app, so they can continue to grow cross-share revenue, and they're trying to grow ad revenue to $1 billion by 2024. I really like the trajectory of the stock, and I like the momentum a lot, so I'm a buyer of Uber here.
All right, let's turn then to Pepsi, a very different kind of name, a frequent Super Bowl advertiser as well. They just posted earnings. They're having their best week since October, and they've beaten the street for 16 quarters straight. So you're sticking with this one?
Absolutely. They have a history. Their management likes to give conservative guidance. That's why they continually beat expectations. We love their way to execute. First off, who doesn't have chips, Cheetos, Fritos, and Doritos at their Super Bowl party? So obviously Pepsi is a great play here. But not just that. Look at their chart. They have had three months recently where they've had these dips like they've had to start this year. And each time they've stopped at a higher low and they pushed up to a higher high. They're in this uptrend channel. I really like this chart. I really like the stock. They've been very disciplined with their pricing. They're able to pass on a lot of their inflation to consumers, protect their margins, and they have the potential, I think, to push up to 185 and potentially push up higher. So I think you see Pepsi really well positioned, both technically as well as the fundamentals on the stock. Strong earnings, strong management. Yeah. You got to love it when all three of those align.
All right, let's turn now to the drinks makers, and you're a buy on one and a bail on the other. Your buy would actually be Budweiser's parent company, AB InBev. 7-day losing streak. Notorious Super Bowl advertiser, but you like something you see with profit margins. What's going on here?
Yeah, so they're more of an emerging market stock than people realize. Only about 30% of their revenues comes from the U.S., and so they'll very much benefit from a weaker dollar. And we think the momentum they have in Latin America can continue to progress. So we look beyond the U.S. So not only am I hoping for like puppies and Clydesdales in their commercial, but I think that they continue to sell well. They pass on their margin. We've seen this time and time again from these beverage makers of how are they able to pass on prices to consumers. And so far for Budweiser, they protected their margins. They're going to have a lot less FX headwind next year, and we see continued growth not only in Latin America, but potentially also in China. So think of this not as just the U.S. and sitting around drinking a nice cold Budweiser on your back porch. This is also an emerging market stock, and I think they have a lot of room and growth potential. I also think they're finally poised to break out on this chart. They've been stuck on this 50-60 range for months now. I like this stock. I'm betting on them to get a little lift here.
Yeah, I never think of them as an EM play. That's a great point. So then we'll turn, that's your buy, but you would actually bail on Diageo. They make Johnny Walker, Guinness, a bunch of others. Stocks down today, actually on pace for its third straight month of losses, even though, I mean, we're just learning about spirits overtaking beer as a big consumption point in the U.S. Tell us why this one is not a stock that you think will do quite well.
Yeah. Well, hold my beer, but no. Yeah. This one is all about the U.S. It's about 35% of revenues, and the U.S. slowed dramatically in their mid-year update. We saw only about 3% growth versus the 6.5% expected. And they also warned that Europe is also slowing. The management literally came out and said, don't expect these double-digit sales growths. We think we're seeing a normalizing trend. So as we see this business slow, we see it slow dramatically in the U.S. We saw Scotch slow. We saw vodka slow, 15%. And the only thing that grew is we did consumer tequila. That one grew about 24%. I just think the stock, one, it's stuck in a bad downtrend. The chart looks ugly. I don't think you see any supports here. And then two, if you're seeing slowing revenue growth and you're seeing one of their core markets slow, I just can't get behind buying the stock right now, and it's a bail.
You going to watch the Super Bowl?